Hey everyone, Chris Haddon, Jason Balin here with the Private Lenders Podcast. Today we are going to be talking about, I have one quick announcement, but we are going to be talking about the year-end wrap-up at a hard money company, what happens at the end of this year, beginning of next, to get everything taken care of and in position to move forward productively as soon as we are back in January. But first, in case you have not checked it out, pick up your free book of ours, Hard Money Secrets. It just came out. It's at hardmoneyfreebook.com. That's right, hardmoneyfreebook.com. Totally free, just pay for shipping. Go check that out, please. Just dropped about a month ago. Okay, cool. All right, so we have a number of things that happen at HMB, and this has been kind of developing over the years. We're in year 13, going into 14 now. The boxes, in essence, that we need to check at the end of the year and at the beginning of January in a few different categories. So we have, and we'll break these all down in a sec, but basically finance and accounting type stuff, marketing things, and there was one more. What was the other one? Like marketing and sales type stuff too.
And then business planning for the next year.
And business planning for the new year. Thank you for filling that in. All right, cool. Yeah, let's start with some finance stuff. So there's a number of things that happen, and we've gotten used to it over the years. So we get out ahead of it is really part of the point. The things that you should be taking care of now so that you're not waiting until your CPA asks you questions you don't know later on. So a few things, just getting your account balances. So as we're recording this, tomorrow is the 31st. It is last day of the year, New Year's Eve. And so we'll check out our account balances on that day, see what we have for distributions, right? We have to update certain things. Year-end asset values is one that I think a lot of people probably forget until your CPA asks you for it later on. And in essence, that means like the different assets, like it could be a lender account or it could be some kind of real estate or other assets or investment account, updating those to reflect the right number year end. And then making sure all of your P&Ls, all of your expenses, everything's reconciled out, all that stuff is finished in early January so that you can start on the other stuff that needs to be done, like 1099s and 1098s, which is an important part of accounting for a lending company. A 1098 is when you send to your borrower clients the amount of interest they've paid to you during the year, and the 1099 for your capital investors, and then also like third-party vendors. So in essence, for the capital investors, that tells them, just like you get from a bank, how much interest they earned during that year too. So those are two very important documents. The timelines are tight in terms of getting those out and then later on uploading them to the IRS. So having your ducks in a row there is an important one.
Yeah, and in general, it's one of those things. If you're a smaller operation, some of the stuff you might either do in-house yourself personally, and then have your CPA potentially fill in and help as necessary. I mean, we're hands-on, although we have a full-time controller and then we have another full-time accountant in our office. Plus, we have a CPA that does tax prep. We like to have a little bit of control for a few reasons. Number one, so we know exactly where everything is. And starting off, we always wanted to have control as well because we wanted to learn how to do some of this stuff ourselves. So we understood it and we knew it, and not necessarily the keystrokes, but understanding the why and why some of the, and how and why some of this stuff is done. So we're still, again, we're not doing the keystrokes on this, but we have real-time reporting from our controller, from our servicing softwares, from our QuickBooks accounts to see exactly what's going on in every given time. And I think that's important. But if you're just starting off and you don't have those tools, you don't have somebody to help you with that, I honestly recommend trying to do some of it yourself. Maybe overlap some help with the CPA because, a lot of this, if accounting is new to you, a lot of accounting doesn't necessarily make sense logically on the surface, but understanding the keystrokes is helpful because then potentially you can train somebody in the future to do it. And to be quite honest, you're just not going to be in your budget at the beginning. If you only have a few loans, you will need someone to do this. But yeah, so that's finance and accounting, and I definitely take that seriously. Let's jump over to marketing and sales, and then we'll talk about business planning afterwards.
Cool. All right, so there's some opportunities in the marketing and sales side of things around the holidays that could pop up if you think about it. Like it could be year-end content related things that you're doing. Talk about what happened this year, planning for the next. So you can kind of roll that into content, video, audio, emails, whatever it may be, posts, just regular posts. Then there's definitely some sales opportunities too that we try to take advantage of. We probably do a little bit less than we did in the past, but we've been doing this for a long time now. So we kind of have things streamlined down, but like all kinds of holiday gifts are appropriate. It's a good touch sometime during December to send somebody, you know, a basket or a gift or, you know, a Yeti or whatever it may be. And that can be in a number of different people. Like that could be vendors that you work with. That could be your top borrower clients, maybe not every single one, because there's probably a bunch of them if you're at a decent size, but some of your top repeat clients for sure. Capital investors also. I did that, not so much anymore, but for several years when we were growing, I always put effort and some budget into a nice holiday gift for people on the capital investor side.
No, I think that's a good look, and it's definitely something that's doable. And listen, even if you spend $25 a pop, the return is helpful, especially if you're looking to raise more capital. I mean, you got to have as many touches as possible with all these folks, and there's no better touch than providing something of value. And potentially, you know, if you even want to meet up with them right now, and that's kind of up to you. We're still kind of in the middle of COVID, but like right. It could potentially give you an opportunity to touch base with them and meet them. I don't know, maybe give them their last check of the year. You know, if you owe them money from loans that are coming in, and just, you know, at the very least, a handwritten thank you note or a handwritten note that says, "Hey, happy holidays." I think it goes a long way, and it's kind of a good gift to stay in front of them. And, you know, we used to do, obviously, team holiday parties at restaurants. We used to do, and when I say used to, I mean, we will again next year. We're just in the middle of COVID right now. So the restaurants around here are closed, so we can't. And to be honest, I don't think we really want to do a virtual one. I know people are doing that.
We've done enough. We've done enough virtual.
But I don't think anyone's going to get a ton of value out of that. So anyways, so maybe I shouldn't use the word used to, because that's only relevant, you know, right now. But holiday parties for the team. At some point, we've done holiday parties or like get-togethers and happy hours for some investors. We've never really done that as a group. Like we never been like, hey, 80 investors, let's all, you know, that wasn't a good look. But we did do it. You know, a lot of our investors are groups of, you know, 4 or 5 different family members, 4 or 5 different colleagues, business associates, things like that. So we would do little happy hours, kind of one-on-one with them. That was always a good look. And then we also, you know, because we host a meetup group, we would do a big meetup group holiday party. We always felt that was very, very beneficial as well. So just things that can kind of spring you moving forward. It's just an excuse, to be honest with you. The New Year's is an excuse. The holidays are an excuse to potentially get together.
Yeah, totally. And there's a lot of opportunities for that, and other people's stuff. It doesn't necessarily have to be stuff that you organize. It could be other things in the real estate world or finance world that you're invited to. And I don't know, a lot of us, when that comes around, is like, you know, it's kind of like a bit of a hassle. So much stuff going on in December, and you're like, I got to do another party. I should probably go to this one too, and I got to host my own. And then, but it's worth it. It's always been worth it. You just suck it up, you knock it out, and putting forth that effort goes a long way for sure.
That's right.
Cool. Should we talk about business planning?
Yeah. So business planning kind of for the next year. You know, I'm guessing you've already, you know, if you're like us, you've already kind of looked at all your numbers of how many units you did, how much volume you did, potentially top line revenue, bottom line revenue, things like that. And there's no better time to kind of start the year off strong and get into the next year, right? Figure out where you want to be, what that you know entails, how many units you want to do, how much volume you want to do, how many more investor capital you want to raise, things like that. And the important part with all of this is not only putting it on paper, but also sharing it with your team. I think as soon as you know, putting it on paper, it becomes more realer, whichever one's the right word. But then as soon as you actually share it with your team, and that team may, you know, if you're one person operation, that could just be a spouse or a business partner. But as soon as you kind of really share it with the team in general, it becomes real. And you have your target metrics to really go off of.
Yeah, and also circle back on it frequently. You know, I think that's one good habit that I learned in the mortgage industry back in the day was that, so I had a 5-year run at a big commercial bank in the mortgage department right out of college, which was a good way to start. It was a good like intro into real estate and eventually hard money and finance and all that. And like clockwork, we had a monthly meeting where we discussed the production. It was like whatever day of the month, like the first Tuesday of the month, something like that. And we would discuss all the metrics that we were tracking from the previous month. So volume, units, might have been some revenue, some other related stuff. But like clockwork, you knew that that meeting was coming and that we were going to go over these numbers, and everyone knew what the numbers were. When it comes time for a new year, you'd submit some, like in essence, like a business plan to the branch manager. And then it was all documented. Everybody knew what everyone's goals were. And then every month you review it. So we've tried to do, in essence, duplicate that even with a smaller team and in the hard money world. And there aren't all that many metrics to go over, but just having a few important ones that are clear to everyone. And we have a Monday morning call, a Zoom call with our team, because we're located, even before pandemic, we're located in different areas. So the Monday morning call, we could check in about a number of different things. And once a month, after a month ends, it would be about that. So yeah, like Jason was saying, in essence, you play around with those numbers now. Whatever your important metrics are, probably units, volume, top line revenue, bottom line profit, stuff like that. If you're doing acquisitions, it could be something related to that too, acquiring properties, whatever your important metrics are that are on paper, shared with everyone and revisited frequently throughout the year. I think there's that clarity and that consistent communication has been very, very important in our growth over the years.
Exactly. Let me add one more thing, and then that'll do it for this week's podcast. Towards the end of the year, if you do have employees or staff or assistants or whatever, it is a good time to potentially give them some sort of bonus or something. It goes a long way. Obviously, it's up to you to depend on how much you want to do. Obviously it can be, anywhere from a $25 gift card to a few $1,000 bonus, depending on, what you believe is best, how it helps you, how they helped you throughout the year. But that goes a long way. I'm not necessarily saying that it's 100% expected by everybody, but it does go a long way. So, put some thought into it. Obviously, it doesn't necessarily need to be money, but put some thought into it, and that definitely, shows your appreciation for the hard work that your team put together all year.
Yeah, for sure. Hope you guys had a great 2020, all things considered, and are moving productively into 2021. And remember to check out the free book, Hard Money Secrets, that just came out at hardmoneyfreebook.com, the mastermind group at hardmoneymastermind.com. And if you're curious to see anything about our company, check us out, Hard Money Bankers, on any social media.